the entry and the stop loss theory. The most important question is where to set the stop loss regardless of the entry time of the time regardless of the entry time frame. So where to place the stop loss as secure as possible regardless of the entry time frame, taking into account the volatility of retracting by entry type, or what the fuck is this, of the market. Taking into account the volatility of the market. You need to understand that right? When you want to trade and you have a zone like this, and the zone will be your entry, right? When the price go back down. But the question is that where do you put the stop loss? Just here below, or below this recent low, or below this lower low here? That's the question. That's the most important question, because the trade can go down like this before going up. If you have put a stop loss here, you will have gone out without even having the ability to take your take profit. So the question is how to put a very secure stop loss where you cannot get out, you cannot be out of the market. So what I want to tell you is what? I want to tell you that from what we have seen, right? We have already seen many theories. We are at the theory number 7. We have seen the framework theory. Then we have seen the time frame skipping theory. Then we have seen the vegetation cycle theory. Then we have seen the direction theory. Then we have seen the volume theory. Then we have seen the line theory. Now we are seeing the entry and the stop loss theory. You need to understand that all of these theories are connected to each other. The framework theory, for example, help you understand the fractal of the market by skipping the time frames. And then skipping time frame help you draw the Viche Ishimoku cycle. And then inside the Viche Ishimoku cycle, you know when the direction will change or continue. And the volume, and then having that in mind about the direction, you can then have logical thinking with the volume. And then when you know the volume, you know also the behavior of a line. So all of them are linked to each other. There is no isolated theory, right? I just created big observations, big chart observation, like a scientist, like a physician, like Einstein, Newton, Tesla. Big observation, and I wrote those theory and put it in set of theories to help you understand what to do at each time, because in each theory I gave entries, take profit, and now I'm giving you stop loss that will not get broken, so that your mind right get aware, enlightened, right? That's why I created theory. So there's no an isolated theory. Those are just big boxes that are linked to each other like a chain, and it will help your mind how to do think very well. It will help you think the best way. So even this entry and stop loss theory is a very connected theory that is connected to other school theory. So the entry and stop loss theory wants you to know which stop loss will not be broken. So to do that, I've think a lot about where to place a stop loss. when the when you enter here, where do you place a stop loss? I've seen that I've realized that to place a stop loss, you need a very fixed way, a very static, not something that fluctuates depending on online too much, like maybe or having something online is like or price behavior, like it must be fixed. So I realized that the vegetation Ishimoku cycle gives us a very fixed way to place a stop loss. So that's what I'm about to show you. So the idea behind the stop loss is that, right, you need to have a fixed point on the graph, an unmovable point on the graph where you place your stop loss. And it must not be fluctuating so that you don't go and start hesitating. Now you start hesitating, where do I place the stop loss, or start getting anxious about your trade being broken. So we will be looking at a stop loss that cannot be touched when after you enter. A stop loss that cannot be touched. So that's why I've looked at very fixed point that are non-movable. What the hell did I do here? Okay, let me try to fix something. I didn't, what? I didn't put, wait, let me, let me change something. Zoom, can you just go down with your bar? Okay, I wanted to put transition here. So here is the thing. Let us start with with what we can do. We can do it on the chart. I erase all my drawings. I didn't want to erase. So let's do it on 4 hour. So let us look at the vegetation cycle just right here. So you know that you need to go first of all start from you need to first of all start from how do I call it, from a weekly setup, right? To have the root time frame. On the root time frame here, on a weekly setup, this is the weekly setup, an empty space below Tenkan. That was at this level, I think. Not that I think, I know that it was at Kijun monthly. So you go on H4 and you will start trading that. You will be you will start trading what? You will start drawing a, so I had a weekly setup here. What you will be doing is that you will start you putting what the Ishimoku cycle. So we start here with the origin, right? This is the origin. Then we have from this Kijun touch, we have also to SSB, we have the reversal. After the reversal, we have the transition from SSB to till when Kijun goes out of above above till when Kijun go above SSB. Then we have the new trend just at the beginning of this, right? Oh shit. So this one is the new trend. Then after that, we have the correction this way. Then after that, we have the push trend. We have another correction. Then we have another push trend now. So what you're going to do is that, right? What we gonna do now is that we keep drawing these corrections, right? We keep drawing these corrections, and then this push trend till when it finish, right? Okay, it ends up there. So what you need to do is what? Let us then put the entry and the stop loss. You know that for the origin, the entry is on Tenkan inverted, and the stop loss is a stop loss below below Tenkan inverted. Okay. So during this reversal, we have the origin time frame here, the origin cycle here. You need to enter at this Tenkan inverted, and then your stop loss will be the take profit will be at Kijun here above, and your stop loss will be this V, below this V, right? Below this V. That is where you enter here, and then your stop loss just below this V, and then you put a take profit just above Kijun. That is for the origin time cycle. Now, for the cycle of the reversal, why do you enter? For the cycle of the reversal, you enter just at this level of Kijun inverted here, right? And then you place your stop loss at the same bottom V. And that is the most secure stop loss. So you enter here, and then you place your stop loss at the same V, right? V stop. That's what I call V stop. Okay. And then take profit on SSB, first take profit. So you see that it is the most secure stop loss. That's what we are looking for. We are looking for secure stop loss. Now, for the cycle of transition, you enter at think SSA inverted, and your stop loss is also at, for this case, for the case that we have now, the price drop after the transition start from SSB to when Kijun goes above the cloud. So the price drop till SSA, right? So you enter there, and then you place your stop loss exactly at the same V stop like the other ones. So you place like this, and then your take profit is just till when Kijun goes above the cloud. So you have something like this. Now, for the new trend, you enter at KSB with or without Tenkan inverted, with or without Tenkan inverted, and you place your stop loss below the cloud and below Tenkan inverted. That's the first entry and stop loss. So you will enter here, right? During this KSB for the new trend. KSB without any Tenkan inverted, all right? So, but the stop loss will be, first of all, you need to know the bottom of the cloud. The lowest point of the cloud is this one. And then the lowest point of SSA when the price drop to the left, on the left, is this one. So when you enter at this point, you place your stop loss below the Tenkan line. So you must be below the cloud and below the Tenkan. That's the most secure stop loss. Remember, we are looking for most secure stop loss when you enter, so that when you place your position, you are not stressed by anything. You can go and sleep and be at peace without stress. So the second entry is on Tenkan and you just place your stop loss at the V stop. So you can also enter here during the push trend, and then you place your stop loss during below this V, because this V stop created a V breaker that created then an entry. So you just enter there and you place your stop loss just below this, and you will be secured. You'll be secured. So that's first of all this one. Then let us look at the correction. For the correction, you enter at the empty after V breaker. V breaker. At the empty space after V breaker, or at the Tenkan inverted, right? So for this one, for this entry, right, you enter at the sell. When do you enter at the sell for this correction? You enter at the sell for this correction when, specifically when the price go above this week. So you enter at this point for a sell, and then when you enter there for a sell, you place your stop loss above the empty space, above the void. So you just place your stop loss above the void there, okay, above it, and then the take profit will be Kijun first. Okay, that's the correction. Then when it is about correction, you will see that we had another correction here, right? Another correction. Let's look at correction first. You could have just entered at a sell by marking, first of all, the high of this week. When the price goes above the high of this week, you'll be selling this correction after the V breaker and placing the take profit on SSA, right? Yes, you can time this. We are on H4, on the H4 time frame now, but you can do it a little bit of timing of the entry by going on 15 minutes or 5 minutes, selling that. Same thing for this next correction here. You mark the high of this week. When the price goes above that high, you sell at this point, and then your take profit is SSB, like this, right? Your take profit is SSB, and then your stop loss is on the empty space. So I'm using only one time frame without going on lower time frame, because to help you see a little bit where you need to place the most secure stop loss. That's why I'm not doing fractals or TS, time frame skipping. So you add this one, and then same thing for, okay, there, this one was not a correction, this was, by the way, a reversal. So let me put it this way so that I can do the push trend. So now let us look at the push trend. For the push trend, you enter SSA. When you enter SSA, you put your stop loss at SSB. When you enter at SSB, you put your stop loss below SSB, right? So let me look at this push trend. On this push trend, you have entered at the space between Kijun and SSA, close to SSA. So when you enter the space also between Kijun and SSA like this, you buy just here and you place the stop loss below SSB, and then the take profit goes as much as the push trend keep going. So you place your stop loss below SSB. So now for this push trend, this next push trend here, you enter SSA and you place your stop loss below SSB too. You enter, you place your stop loss below SSB. That's it. And then the take profit goes as much as the push trend keep going to the upside. For this last push trend, right, it's a little bit technical here, because if you enter now at SSB, okay, you need to put your stop loss below SSB. And the best below SSB will have been this lowest week here. Okay, that's where you could have put your stop loss below there because this one had another retracement. So, and place your take profit anywhere up above there. The reason why I'm telling you to put the stop loss when you enter SSB during the push trend, you place your stop loss far below here, is because on daily you will see that on daily where we are looking for the Viche Shimoku cycle, um, where we are looking for the Viche Shimoku cycle, you will see that the entry that we are looking for is at this place, and then the last bottom of on daily is here just below. So that's why I told you to place your stop loss just below there, and that's the maximum stop loss. I didn't say you cannot go on 15 minutes start to refine the stop loss, but I'm telling you maximum stop loss like secure that will not be touched. That will not be touched. It's the most important for the entry and stop loss theory. You need a stop loss that will not be touched, that will be secure. What I call security is that you enter a position and you don't stress. You have no stress, no anxiety, no fear or getting, no fear of losing the price. So even if you go on 15 minutes to refine, just be aware that just first of all be aware of your maximum stop loss on H4. H4 is one of the best entry. H4. H4 is one of the best entry combined with day trading and swing trading. Day trading and swing trading is the best, one of the best entry. And what most of the time is best to do day trading first and swing trading first before you start scalping, so that you can understand. Okay, so anyway, let's do now another example. Let's do another example. Now let's do a downtrend example. That would be better. That would be good enough. Let's do the downtrend example of this one that just fell down. This Kijun, for example, right? This is a Kijun weekly. So that in the root time frame, we are on Kijun weekly. So let's go on. So let's go on H4 to draw the cycle. So the cycle here begins at this point, right? We have here the origin cycle. This is the origin cycle. So during this origin cycle, we should have sold at this level and then place the stop loss. Oh, I forgot to mention something. Let me go take back my chart. Let me take my chart back where I was. Okay, I forgot to mention something. You see, you will see that something about the previous cycle that I just drew. You will see that you maybe you can be anxious that I'm just talking about stop loss. I'm not talking about take profit. The thing is that the origin entry, your trade will be long like this because you know that the trade will go up all until that point above. That's why you should not be too greedy about your stop loss. Because I can tell you that place the stop loss and then place the take profit just below here. You need to trade the whole cycle till the push trend, right? And you know that the trade will go to the upside. It's not like you don't know. You need to you need to see all of the line of prediction. When we will reach the size theory will help you predict this movement. That the trade will go all the way up with your money. So those take profit are not just take profit at that respect only the small cycle. I mean, for continuity take profit. I didn't talk. I'm not talking about correction. Correction take profit. The correction take profit must end up at SSA, SSB maximum as the way they are. But this continuity to the upside, continuity of this weekly setup, their take profit is far at the top because the weekly setup high length is very high, right? So the idea around all of of the entries and stop loss of this element is to make you have a secure stop loss because you will take a long movement. So you not be greedy that, hey, how can you say that during the origin, I only put a take profit that is like risk reward of one. Risk reward of one is not based off my strategy. Strategy. I go fuck yourself. Just put the secure stop loss and your take profit is far above there because you are trading volume. You are not trading risk reward. When you trade volumes, a volume has, I mean, volume, TK cross volume and KSB volume. KSB volume and TK cross volume already have risk reward, already have a win rate, already have winnings. They trade volume. What do you call risk reward? Trade your volume. Trade volume. Volume will give you every type of risk reward you have ever imagined. Volume is the blessing of the market. The volume that you see there, it is the blessing of the market. What are you talking about risk reward? Or I place a big stop loss. My risk reward is small. I should not do that. That's not what professional. Go and fuck yourself, nigga. What bullshit is that? Just trade the volume. Don't you see that the volume give you the so-called risk reward that you are talking about? Don't you see that the KSB volume from when Kijun crossed above SSB all over the way up here, you had like crazy risk reward like 11, 12, 7, 3, 5, many opportunity to 10 times your account. What are you calling about? My surplus is too big. I don't even want to keep talking. I don't want to keep talking. I need to say, I can say some weird stuff in my videos, and my teaching videos. I just don't like people who are fixated by result, risk reward, winning trade, cash out. Those are beginners. Real G's trade volume. Real G's. I mean, kill boss babe too. Oh, the YouTube game is crazy. The YouTube game is crazy. People are so fixated, like all they are all noobs. That because that's what they sell on YouTube. Dollars, risk rewards, winnings. What else? What else are they selling? Uh, anyway, that's the big thing. Nobody is selling anticipation. Anticipation of what? Volume. Who sell anticipation of volume there? Meanwhile, anticipation of volume beats all day the risk reward. It's not because your strategy, the so-called strategy, is risk reward of 3 that it is the best thing for you to do. The best thing for you to do is to anticipate volume, and volume will give you the craziest risk reward, like times 10, 7 to 30, like crazy risk reward. What do you call risk reward of 3? Even in my document, I just put risk reward of 3 just to tell you I mean the document of risk reward there. I just put the risk reward of 3 just to give you a certain idea about the potential that you can make. But stop focusing on that risk reward. That risk reward is just a BS something. Anyway, let's continue, please. Let's continue, please. I'm not here to yap about any bullshit that I already yapped. I already yapped about it. Anticipation is the key. Anticipation of volume. That's how do you make money. So let us do the downside. Another one just for you to understand a little bit some things. So we have here the origin time frame, and then at this origin time frame, you could have sold the empty space here, placing your stop loss just at that point and take profit. First take profit is Kijun, because it is the first take profit. You are on a Kijun zone. So it means that the Kijun zone will really react for long. I just put the first take profit there. First take profit. Do you know what when somebody says first? It means that there is second take profit that is the higher one. Because you need to follow the Kijun impulsion zone. Anyway, let's continue. First take profit there. Let me continue. And then for the reversal start from actually here till when SSB is touched. From this reversal, you can sell on Kijun inverted, and then stop loss always at the V stop above Tenkan there. First take profit just here below. Then the origin, sorry, the what do I call origin? Transition. For the transition, you sell literally SSA inverted, and then take profit when Kijun goes above, below SSB, just right here on this candle. So stop loss always is secure stop loss. The secure stop loss is just at the same level. So you see that it's a secure stop loss, right? It hasn't been touched. That's what we are looking for. We are looking to stay alive in the market. So now let us look at the new trend. This is a new trend, right? So during the new trend, when you enter there, and then you enter at Tenkan for this new trend, you enter at this Tenkan, and then you place your stop loss above all Ishimoku, all cloud line, right? All of the cloud line here, but also above Tenkan, the highest line of Tenkan, just at the left here. So just replace your stop loss here. That's the most secure. But as I said, if you just look at this one as a take profit, you will see that 0.5 as a take profit is too small. It's not small. I want to eat big. Brother, it's just the first take profit. For your stop loss, I'm just showing you where you need to put your stop loss, even to not get out even if the price retraces as much as it wants. Because this take profit is just the first take profit. It's not the complete one. You will be able to predict all of this long movement, to have predictive analysis. Because if you don't anticipate that long movement, how do you earn the money? You will still be anxious. You will still be doing weird shit. You need to predict these movements. So you have the ability, and let me keep showing you theories, and that will help you. So now you have here the reversal, the what? The correction. Yeah, the correction. For this correction, you enter here inside the empty space. After this V breaker, you enter here for this. And then you place just the stop loss inside the empty space like this one. And then take profit at Kijun. Now, after that, you have a push trend. Push trend, that is all of this as a push trend. And then for this push trend, you sell just even this Tenkan inverted stop loss here above SSA. And then you take your first take profit just below. Stop loss must be secure on SSA. So now, after that, you have another correction like this, and then you will be buying after this V breaker is broken to the downside, like this one. All of this place is a buy for a correction, so you buy on this empty space, and then the stop loss secure anywhere on the empty space here. So the take profit is on SSA. So now let's go and look for this long push trend down. This long push trend down, you go what you need to do is that during this long push trend down, you sell right on SSA. You put your stop loss just above SSB for a secure stop loss. right? And then your take profit move down to till here. So now the thing is that we are having a correction now too, right? For now, we are having a correction, this correction on Bitcoin, right? You could have just buy just after this V breaker inside this empty space and take profit at this level. Stop loss just somewhere here. So now let me show you how you can refine this. Even if you have a very secure stop loss on H4, you go on 15 minutes. You need to go on 15 minutes. When you go on 15 minutes, for this position that you are just taking, what you will be doing is that when you enter, for example, on 15 minutes on this Tenkan, on this Kijun inverted below the cloud, this one, right? You place your stop loss just at this bottom, right? And then you have a more refined position. That's how you can do. But do it for correction. But I'm saying that for things like this continuity of the downtrend, right? If you come and if you have come and do it on 15 minutes, just you will have come and try to time a little bit, do something like this, 15 minutes, then can inverted, and then you refine a your stop loss like this, and then you take this position. You have a tighter a smaller stop loss, but the trade went a little bit above again during this down push trend. So my advice for you is that on H4, you need to always be aware of where SSB is for this push. Where SSB is, you need to be aware of the more secure stop loss. Even if you go and do refinement of stop losses, you need to be aware of the more secure stop loss. Because if you are not aware of the most secure stop loss that will not be touched, how can you be sure that you can win the trade as easily as you can? No, you cannot be sure. So be aware of the most secure stop loss. So that's why I created this theory for you to be aware of the most secure stop loss. So let's now look at the take profit theory.